Hello everybody, welcome back. 25 and invested, and we are going to go over my TFSA. This week has been a hell of a week. It has been fantastic. I have been reaching all-time highs again. My portfolio is sitting at $84,232, which is the most it's ever been. Currently, all-time, I'm up 24% or 16,232%, or 32%, God, I wish, dollars. So 16,000 up. That is fantastic. When I'm buying a car next month. I'm buying a car next month, and I hope to see, one, I'm not going to be spending all my money on that car, and two, the reason why you haven't seen me put any money in is because I'm waiting for said car. So you're not going to see that yet, but there's going to be some huge differences probably in about 1 month or two, where I will be maxing out my TFSA. We're going to find out how much my wife has in hers, and then we're going to be maxing out everything all at once. I hope. If anything, we'll get pretty close. My wife, she's not from Canada. She is, she did immigrate to Canada. We've been together for quite a few years now, and she doesn't have as much room in her TFSA as I do. Now, I am thinking about how I'm going to add her portfolio into mine. As far as videos go, because TFSAs, even though they're held separately, they still are something that we hold together because we're married and it is our money. So I'm trying to work how I can show her TFSA in with mine. And yeah, on the weekly, I am up 1%. Now it says daily up 1%, which is $500, and then on the weekly I'm up 1%, which is $800, almost double. So Wealthsimple's doing some funny things. I think that this $800 is closer to one. I mean, it is closer to 1% than the 500. But anyways, on the weekly we're up 1%. On the monthly we're up 4%. On the 3 months we are up 12%, and on the year we up 25%, which is actually 24.6%. So yeah, we're doing it. It's nice to automatically not see losses. I think that, a lot of people who start investing at a time when the market dips, they have a lot worse feelings about it. And I got fairly lucky for when I started. So I'm happy. Not too many changes in the portfolio as it stood. I did get a bit of dividends, which was like $60 now, just sitting on side. It's been pretty nice to see more money rolling in. Sorry, excuse me. It's been nice to see more money rolling in. Apple, I know, had a pretty rough week, but they still are at $188. So Apple's still doing great. This play with Apple, I'm not touching it, and I don't believe that Apple's going to be one of those companies that is just going to be growing. I'd love to see it, but I bought this stock because of share buybacks, because of how they treat their shareholders, and they are rewarding them. They're increasing dividend. They have a share buyback. It's all there. So I'm going to keep Apple for basically forever. I mean, everything in here is going to be kept forever, but Apple for sure. Alibaba had a real pitiful week, but the stock price didn't move all that much. And, maybe people were pricing in worst case scenario. So Alibaba, not that much of a change. I know they're going through huge buybacks, and I did see somebody post on Blossom that if you didn't account for their, if they didn't buy back any shares, it would be like $60 or $50 per share. So, maybe there isn't enough blood in the street for Alibaba. Not yet. BlackRock up 27%. This has just been one that has always held. I bought at 625. I am up almost 30%, 27%. I guess closer to 25%. Bad math. BlackRock has been doing well. Brookfield just released. I know BAM just released their earnings. BAM would have been the stronger stock to hold if I was to hold BAM or BN, but I think Brookfield it's sitting at a higher margin of safety than BAN. So I will continue. I love holding BN. I think that, they have a lot going on. I think the insurance company is what you're holding it for, especially with the growth there. But, we'll see what happens with BN. Bank of Nova Scotia, basically flat from last week. Berkshire Hathaway is 44% up. Now, I'll tell you why that's a problem. They are maybe the most expensive price to book ratio wise that I've seen. So I do believe Berkshire Hathaway is just an expensive stock right now. That's the way I price them, is price to book, because they're an asset holding company. So you're paying for what they have on the books, price to book. It is 1.65 or 1.68 right now, and I'm looking at 1.35 as a buy. So yeah, cash just sitting there. I have $4,000 left in cash after I bought Xeqt and I bought MO a couple weeks back, and we'll see how those are doing. Caterpillar, up 57%. They had a huge earnings. This is one that, okay, so I used to follow an investor channel, and I bought CAT, and I should have just listened to myself. I use CAT. Love the company. I should have listened to myself instead of maybe I was doing research to prove that I was wrong, and therefore that's what kind of happened. But don't believe everything you hear. Do your own due diligence. Listen to yourself. This is the importance of making good decisions. At $180, I was sitting on a buy button, and I didn't with Caterpillar. And I'm allowed to regret a few things, and that is certainly one that I regret. It's something that I'd take advantage of if it happened again, but yeah, I'm allowed to regret things. It happens. Dollar General has come down a little bit, but this is one that I started the position at like 30% loss. So Dollar General, it is going to be a long hold for me, and we're just going to ride it out. They changed up leadership a few months back, and things are going well. So even if it doesn't reflect that in the stock price or the debt, we won't talk about that. Dream Industrial. If I had to hold one, Nexus REITs or Dream Industrial, it was going to be Dream. I remember buying a few more shares of Dream a little while back. I'm still up damn near 8% on Dream. Nice. Dollarama, up 87.77%. Again, a very small position. I used to be up. Actually, no, I don't think I was up any more than that. It's almost $170 a share, which is crazy. I'm kind of seeing it. They're going to do a stock split. They have in the past. They might again. We'll see. Empire Co. Yep, down 7%. I bought that not too long, I guess last year, like early last year. I'm not gonna put more money on. I can think of other places I'd rather put money. Google, up 28.4%. I bought Google. I averaged down in Google. I kept averaging down in Google when I think it was $85. No, went down to 87. I bought at 90. I had another buy order at 85, and it only got down to 87. So nice. I did average down in Google. It is a fairly big position. Yeah, so $7,500 now. Damn. Home Depot, I'm up 18%, 2 shares. It is something that if I see that number flat again, it's something that Home Depot, I have enough conviction to pull another buy. So if I see it where I want it again, I will buy it again. So yeah. Intel, up 28.4%. This was a position that I was down almost 50% in. So Intel, you've been doing it. You've been killing it. They have a lot of big future plans, which is sort of that's what drew me in, because stocks can't stay bad forever. So I am here for the long run on Intel. Meta Platforms is now the top stock in my portfolio. Damn it, I'm up 150%. I remember buying my last 2 shares. I went from 8 shares to 10 shares. I remember pleading to Zuckerberg to change. They had a year of efficiency last year, and it has showed. So this is a company where the valuation of the company was so low, but the expertise of the business was so high. So now we got this snapback. I do believe that there's likely going to be a pullback in Meta stock. Not everything's great forever, but it's been killing it. So yeah, even if I suffer a 50% loss on this position, or like down on this position, I'm still up 75%, which is it is very wild to think about that. Sorry, I shouldn't be playing with my hair. Trying to get better at that. Manulife Financial up 33%. This is a stock that showed up on the acquirers multiple list. I owned it way before then. I've been holding it for a very long time as a steady source of dividends. I should be reinvesting the dividends back into Manulife. I just think that $30 per share is a little expensive for Manulife Financial. I do have an average of, I believe, about $24, $22, 22, 24. And I do believe in the stock price there. I just don't, I'm not throwing money at it while it's sitting at all-time highs. And, that's just par for the course for me. MO, I'm down 0.14%. Even if this stayed flat for the entire year, which I bet that it might, I will still see 10% in dividends. And I did do a little due diligence on this one. Yeah, dividends are pretty safe. So I own 40 shares of MO. I like it. I wanted to own a smoke company, or I wanted to own companies that don't move with everything else that I own. I own a lot of tech stocks and a lot of financials. So tobacco, baby. Manulife. Microsoft, I'm up 60% on. They have just been killing it. 2 shares doesn't look like a lot, but when each share is $420, damn. Yeah. NEWT down 55%. This is my worst performing stock, and it is my worst performing stock because it did follow Algonquin Power almost to a T, just a little worse. So NEWT, they're turning into a holding company. They own a bank. They're hemorrhaging money. They are diluting shareholders. They are not being good boys. So it just hurts my wallet. That's all it does. It's not a very big position, but it also was when I started investing. And as you know, I don't sell stocks often at all, if at all. So NEWT, damn. Nexus Reits, 14%. I should stop shaking the computer. 14% down. They had a huge payout ratio. I should have listened to my gut. I said 650, and I do believe that it is buy. The dividend on that at 650 was about 10%, which I thought was super high, but I should have also realized that a 10% yield is great. At that price, I should have bought it because I still believe in the company, even if the payout ratio is a lot. So, Nexus Reits, damn. I'll listen to my gut. I got to listen to my gut more. My gut. I got to listen to what I've already set for myself because I have a plan. Smart Center REITs was not planned, down 16%. I just didn't love this business right from the get-go. It's just here rotting away. I'm just getting 93 cents dividends, which never goes up. So that's fine. VIG, I'm up 10%, which is very good. VIG owns a lot of companies that I already own in here. I bet you Meta's going to be added to it because Meta pays dividend now. So it is the dividend appreciation ETF after all. So I'd like to see what happens with VIG and the Meta dividend because I guess Meta's a value stock now. Nice. Walmart, I'm up 27.7%. Nothing really to say here. I haven't looked at Walmart in quite some time. It is still a relatively small position, about 1,000 Canadian, but it's these small positions that I like to have. It just shows me what the overall market's doing, where money's flowing, especially within just my portfolio because I have so many stocks. So it's nice. And then Xeqt, which is the base of my portfolio. It is at the bottom. It is the base of my portfolio. I use this to judge myself against it. So most people use the market, VOOSPY, even QQQ. I use Xeqt to judge my performance because that is the base of my portfolio. If I can't beat the base, then I shouldn't be investing in singular stocks. Now I have consistently been able to double Xeqt's return so far, which is fantastic. But just to keep the edge off of me, I want to keep Xeqt as a larger portion of my portfolio. Both Xeqt and Berkshire Hathaway, I want to have to take the edge off of what I do. That's the plan, at least, and that's why $4,000 still sitting in cash for time to buy Xeqt. I know time in the market beats timing the market, but when everything's so high, it's really hard to justify pulling that trigger. Anyways, thanks for watching. If you even made it this far, most people watch about 5 minutes, which has been fantastic. I'm doing longer videos to keep my watch time up. I am trying to get monetized. I'm not exactly pushing for it, but I do bug people. I don't ask for subscriptions. Like, I don't bug to subscribe, even though, by all rights, maybe I should. But I do just throw myself out there every chance I get and just try to, I guess, market me. Anyways, thanks for watching. I'll see you guys next time. Bye now.